That the bourse is having a good rally in the past few days. What are some of the reasons behind that?
Basically, there is a lot of general optimism in the market. We started the year, everyone feels like 2010 is going to be a good year. But if you crunch down to look inside at the figures and how the market actually is moving, you'll notice 65 to 85% of all the trades that are taking place are actually foreign driven. Foreigners coming in to actually snap up their darling stocks, the British Americans, Equity Bank, your Safaricom, and your Kenya Commercial Bank. So they actually started with Safaricom, which sparked the rally in the rest of the counters. So we're still waiting for retailers to come back into the market in their numbers.
What are the upsides in the market though right now?
Pardon?
What's the upside in the market right now?
Basically, if you look at your counters like Ken or Kobil, like British American, there seems to be a shift towards the industrial side of the market. That's what people are actually running into. But if you look fundamentally on the ground, if you look at what is actually happening in the general economy, there's really nothing that is pointing towards all this confidence and optimism that they started the year with, because most factors, most indicators are still pointing southward.
Well, let's take a look at the story coming out of Kenya of Rea Vipingo. Its pre-tax profit dipped about 6%. What are some of the reasons behind that?
The agricultural sector, the main driver of their growth last year was the shortage, which spiked prices up to cover up for that supply shortage, and most of them were making profits. But as the year went by, prices began to stabilize and started coming down. And you find for Rea Vipingo and all the other counters, that's now what started eating into their revenues. Costs also were spiking up last year, so that also ate into their revenues.
And what do you think should be done to pick up its earnings? Because its earnings per share eased to about 2.48 shillings from 2.80 shillings.
I guess it's a matter of cost management for most companies actually this year, not just for Rea Vipingo, but for most companies as we go into the year. And I believe we'll get more news on more companies trying to manage their costs as we move along the line. So it's just a matter of cost management and trying to maintain the revenues that you have. If you have an opportunity to grow them, then you grow them. But managing your middle line will be very important.
Is there value in the stock right now?
Not Rea Vipingo. I think there are other counters that can give you a better return for your investment.